Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some stocks that were in play today. Okay, first up, CYTX, super sweet move today, closed up 24%. Congrats everyone, we were all over this. Yeah, this turned out really nice. It's still at 67 on RSI, so there's still a little more room to run until the 70 overbought level. Got a clear breakout on plus DI here above ADX and minus DI, and so this was the move that we were looking for. This is what we call stalking our play. We're watching the setup. Notice how I'd been trading in a sideways channel, and what we were looking for was a close above the closing price here on the what is that, the 21st of September. And so today that finally happened. There was a gap up open above that level. Alerts were put out that it was making the bullish move we were looking for, and then now it and it ended up closing strong. Closed at 49, hit 50 intraday. The reason why we were on this play is because of this close on Tuesday above the 50-day simple moving average, the green line currently at 365. That was our clue that CYTX was setting up to head higher. And so with the candles forming above both the 50-day simple moving average and the middle Bollinger Band, which is this dotted purple line, it was telling us there was more upside potential. So really nice follow through. Now the big key resistance level to break is this line right here at about 54, and this is the bottom of the gap. There's a gap back here from this big drop, and so the low of day on this candle is the top of the gap, and that's lined up with the 200-day simple moving average at 108, and then the bottom of the gap is down here at about 54, and so it's going to need to break through the bottom of the gap to run to the next simple moving average resistance level, which is the 100-day simple moving average at 693. If it hits the bottom of the gap and pulls back, then you could see it test the support, and EMA 4 at 422 will be the key level to hold. The bottom of the gap is a huge resistance level, and so many times it will be the top of a multi-day run. If it busts through that level and it closes above, that's a very bullish signal that it wants to head higher. So just keep that in mind. There is an increasing volume pattern, and this is a 3-day run. If you look here on the 15-minute chart, so we were tracking this in the chat, and yeah, it made the big move early with the gap up open, and it consolidated sideways. And what we were looking for was a break above high close resistance, which was the opening candle, the closing price on the opening candle. And so that finally happened here at 3 o'clock. And so the candle there above that was our clue that it wanted to head higher. It shook the tree a little bit, came down and dipped before the rip, but then it ended up taking off really nicely into the close. Notice the volume really picked up into the close. Yeah, so just keep in mind a break above high close resistance on a volume spike is usually your signal that the stock wants to head higher. It has to stay above that level. It did shake out right here, but it held the middle Bollinger Band. As long as this middle Bollinger Band's holding here, this dotted purple line at 44, it signals more upside potential. If there's a close below, then you could see a drop down to the 50 simple moving average at 40. Okay, take a look at NETE. Really nice bounce today. Okay, it did form a bullish reversal pattern. It formed bullish one white soldier. The open was slightly above the closing price from yesterday, and it closed above yesterday's open, and so that formed a nice reversal pattern. And it also today, if you look down here at the chart, it filled the gap. There was a gap between low of day on Tuesday and high of day on Wednesday, so the gap filled. So now that's done, and what it needs to do, it's hitting right here at EMAs 4 and 8, currently at 768. It needs to break above that level in the top of the gap. If it can do that, then the next key resistance is up here at this 300-day simple moving average at 891. Notice how many times it tried to turn that level into support. You know, there have been 5 candles that hit or closed above that level. So if it gets back above the 300-day simple moving average and it's able to hold that level, that's when you could see it break out higher. You know, 10's a big level on this chart, 11's a big level, but first things first, it has to get above the top of the gap and then get back above EMAs 4 and 8. If EMAs 4 and 8 remain resistance, then that could signal more consolidation. If it drops back below the 200-day simple moving average, that will signal the chart's cooling down, and then it has to hold this middle Bollinger Band currently at 635. If that breaks, that'll signal the chart's broken, and that you possibly could get a reload down here near the 50-day simple moving average at 470, or maybe the 100-day simple moving average at 558. Okay, so let's take a look at TWMJF. This is Canopy growth. It's also WEED.CA for Canadian traders. And so, yeah, this does trade on the Toronto Stock Exchange, and then it also trades over the counter for U.S. traders. And so this is a stock we've been following for quite some time, and this is what we call a long-term swing trade. And so for us, we put out alerts in June that this was the load zone at 5, and as you can see here, it's just headed higher ever since. So this has been the dream swing trade off of 5. We called when that happened that 10 was the big level that we wanted to see it head back to. And then if you look down here at the chart, from February, the high close, which was right below $10. So it came up today and it closed above February high close, and it actually closed above $10 on the day. Now keep in mind, it is on a 4-day run, so there's multiple white candles in a row. So you know, it could take a breather before pushing higher. The whole key now is going to be turning that 10 level into support. You want to see it stay above the high close from February. If that level turns into resistance, then you could see it consolidate. The cycle is complete. You know, that this started at 10 and went all the way down to 5, and then now it worked its way all the way back to 10. If you look at if you use a vertical line and you put it in the middle of the chart, you can see here that it's not an exact mirror image, but this is what they call echo theory. The way down was the same, you know, the way up was like the way down. It just repeated the process. This entire cycle is complete, and so now we're looking for a new pattern. So the new pattern is going to either be a break above resistance, or it's going to signal consolidation and working its way back into the bands. The big levels, EMA4 at 954. If it closes below that level, that'll signal that it could possibly consolidate. As long as this middle Bollinger Band at 862 is holding, the chart is strong and the uptrend should continue. Notice the big volume today, so you got to keep an eye out for the Climax spike. So a red candle tomorrow would signal that it could possibly consolidate. The thing is, if you look at RSI up here, it's at 87, and you've got Fasto at 96. So they're both at overbought levels. Okay, let's look at GNCA. Okay, this is what we call a dead cat bounce play, and for dead cat bounce plays, you know, you got to really keep an eye on EMA4, and so you notice the candles close below the lower Bollinger Band, work their way back into the bands, and then today there was a close above EMA4 at 163. That is the key level to hold. As long as candles are forming above that level, GNCA is in play. Now, if there's a close below that level, it will no longer be in play, and it will be a risk to hold. The only way it's going to head higher is if it closes above the bottom of the gap. There's a gap here between the candle up here and the candle down here. So the high of day on this candle is the bottom of the gap, and so it needs to close above that level and EMA8, which is at $2. If it can close above both levels, then it could possibly fill the gap. The next key resistance level is going to be EMA13 at 255. Ultimately, it has to get back above this middle Bollinger Band at 375 to get a new uptrend going. If it fails to get above EMA8, that would be a red flag. So it's got to trade above 2 to keep this bounce going. Notice there was big volume behind the move today, and you've got a bull cross down here starting on MACD. So yeah, you know, what you have to keep an eye out is we'll just, bottom of the gap is a huge level. You know, it's a major resistance level to break. If it turns into support, it'll be very bullish. If it doesn't, it will signal downside risk. Okay, look at MNKD. Wow, closed up 40% today. I mean, the option traders are just killing it on this one. It's just been an incredible percentage gainer. I guess it was up 4,000 or 5,000% on this run with people that are trading calls. So good job out there, everybody. Good job. Pizza, way to trade, man. You rock. Yeah, so if you look here at Mankind, you'll see that it's been on this multi-day run, and it filled the jar. So it came up in 4 was our big level. Notice that was the December high close, and it actually busted well above that level today, and it ran all the way up into above 450. So it closed at 496. Notice the long upper wick on today's candle, so that does show profit taking. And so you need to be you know, on the lookout for the Climax spike, because when you get a run to high of day, it went all the way up to 650, and then it pulled all the way down below $5. We wanted to see it stay above 5, and it didn't. It pulled below, and then you've got the giant volume spike. When you have a multi-day run, notice that there's increasing 16 volume bars. Each volume bar is larger than the next on the way up, and then you have a giant spike. That's usually what we call the climax spike. That signals the top of the current run. This is more than likely going to have a temporary top here and work its way back into the bands. If that happens, you want to see this 4 level turn into support. The first big support is going to be, you know, the top of this wick here at 430 or so. 4 is going to be big support, and then EMA 4 at 371. Notice the candle closed way above the upper Bollinger Band. You know, the candles will need to work their way back into the band. So this thing could take a breather. It doesn't mean that it's you know, a piece of junk, or that the chart's broken, or that it's ruined. It still has a very strong uptrend. It's just stocks can't keep going completely straight up. Look at MACD here. Check out how vertical this MACD line is. That is an unsustainable move. You can't keep going at that trajectory. It's just unsustainable. At some point, it's going to peak here, and so you just don't want to get caught holding the bag. And a clue is, look at the bearish divergence on accumulation distribution. Okay, so you look at the percentage gain, 40% on the day, up 40%. Look at this big white candle. You're thinking, yeah, people were loading big time, but nope. Look at accumulation distribution. They were actually dumping. Okay, so they were actually using the rally to dump shares. This should be spiking higher. It was up 40%. It shouldn't be going down. So just keep that in mind. All right. So yeah, let's take a look at the MNKD daily chart here. And yeah, this is just a closer look. And this is just showing how when it was down here and it formed a bullish doji star, we on the 27th we put out alerts that the pattern was being confirmed on the 28th. And then notice how it continued heading higher ever since. So yeah, and the key was the close, the bullish reversal confirmation and close above the middle Bollinger Band. And for swing traders, as long as that middle Bollinger Band kept holding, the signal was to keep riding. And the clue that it was going to keep going was this close on the 3rd, October 3rd, above this 300-day simple moving average at 240. Now you could see the candles work their way back into the bands. 371 is the first big support level. And then, yeah, this is a closer look at that steep MACD line. If you look here at the MNKD 15-minute chart, you'll see the climax spike that I'm talking about. If you look here, there was this big push. Okay, so it's on a multi-day run, so it's up. It's up, it's up, and then all of a sudden, this is the climax day, push, 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 and what happens on the climax day? This is where the big players want to unload all their volume. They're not unloading down here. They want the real money. That's way up here. That's twice as high as down here, you know, so the big money, they dumped here. And where did they dump? They dumped right here. Look at this candle. This is your clue. This is the climax spike candle. This is the signal to lock in gains. If you look here, there was the spike to high of day, so you've got a high of day close, and then it ran up to high of day and it pulled back and it formed a long upper wick and a red candle. And then the key is the giant red volume bar. So you have the green climax spike followed by even a larger red volume bar. That was the big red flag, and then it was down ever since. You had your little bounce right here, but this is looking more like a bear flag. So you got to be careful on bounces when a stock is pulling down, because it can form a flag. It looks like it's going up, but it'll drop further. And so what's happening now is the middle Bollinger Band, there's actually a close below. That's why we wanted to see a close above 5. That was at 510. It closed at 496. That is signaling more downside risk. If it closes below this level here, the next target's going to be the 50 simple moving average at 417. At 496 today, you could easily see a 20% drop before the next major support level is hit after this 470, 475 level. Okay, so yeah, so mankind, awesome run. It's just you have to learn how to lock in gains. Okay, so yeah, take a look at TEAR. Okay, so this was a stock we put out an alert a couple days ago on Tuesday on this candle when the upper wick broke the middle Bollinger Band. We said keep an eye on it. It looks like it's setting up. And then the following day, yesterday, look how it closed above the middle Bollinger Band, but they psyched people out with the black candle. You know, they closed below the open, and people didn't know, is it going to keep consolidating? Well, today it made the big break above resistance, and so this was the move everyone was looking for. There was a bullish increase in volume. You've got a parabolic SAR bullish flip. The dots are below the candles, and the key was the close above the 50-day simple moving average at 165. Bulls want to see that level hold, and then they want to see a break now above the 100-day simple moving average at 178. That would be the best thing to happen tomorrow if it could close above that level. There was a close above that level on the 14th, but it had failed to hold, and it dropped below. This is the first time that this level has been tested since the 14th. So if it turns into support, there'll be major bullish implications, and you could see it run back up to this $3 level, where the 200-day simple moving average, and where this high closed from July, which is way up here at 340. So yeah, so this chart is heating up. We called that out in advance, because what we do is we not only have stocks that are running, which are called momentum plays or bounce plays, you know, the stocks that are hot on the day, but we constantly have multiple stocks where we're watching the charts, and we see the setup coming. You got to think like chess, where you're thinking multiple steps ahead, and you have to be able to foreshadow where you think this is heading by the way the chart is setting up. And that way, when a stock finally does either break resistance or bounce off support, you don't have to think about it. You can just take action, because you've already done your homework. You've already put in the time, and you've got the setup already on your radar. Okay, so let's look at ATOS here. So this stock got back above the middle Bollinger Band. I know a lot of people are talking about this play, and it's got to hold the middle Bollinger Band here at 54. Okay, so it bounced before off of the 50-day simple moving average, now at 45, this green line, and then it got above the middle Bollinger Band, it pulled back, and now it's back again. Many times what happens is you get a close above a key level once, it pulls back, and then it's the second close above that level that confirms support, and then it wants to take off higher. That's what we're looking for here. So if this 54 can hold, then a possible new uptrend can start, and then our next target is going to be the closing or upper Bollinger Band here at 71. The closing price on June 26 is going to be the big level to break here. Notice how it closed right at that level, and so if you can get above that, then you got the upper Bollinger Band. If you can get above the upper Bollinger Band, then you're looking at this high close here on the 12th of September, and the 200-day simple moving average at 83. One of the reasons why we like this play is the volume. Check out all the volume here. So volume precedes price. Okay, so you know, bigger players like to take their time and load before it runs, and so whenever you see the big volume while the chart's turning bullish and heating up, that's your signal that there's potentially more upside. And then look here at the PSAR bull flip. Notice how the dots were above the candles, and then now they flip below. That's SAR stands for stop and reverse, and that means that potentially the downtrend is stopped, and possibly a new uptrend is beginning. And so notice the 12.26.9 MACD is pinched. If that crosses over there, that's going to be your signal the chart is heating up. Notice the 8, 13, and 5 has already crossed over, so that's another signal that a possible uptrend is starting. Okay, let's look at DELT. Okay, so we've been you know, if you notice, most of these stocks have been in the healthcare sector. They've been on freaking fire. You know, there's been lots of sectors running, technology, and then another one is this materials and specialty chemicals. They've been super hot, and so there's multiple penny stocks that are in this sector. And so here's another one, DELT. This one is heating up now. Okay, so you know, we have like GEVO, AMRS, RKDA. There's a whole bunch of them, and so we've been posting charts on them, and they've been heating up, and so now we've got DELT back above this 50-day simple moving average at 113, and above the middle Bollinger Band at 113. Notice it closed above those levels at the beginning of September, and it failed to hold, and it pulled back. So we were looking for those levels to hold and turn into support, and for a new uptrend to begin. We just talked about the parabolic SAR. Notice this had the bull flip. The dots were above, now they're below. So that's stop and reverse, possible new uptrend starting. And so the closing price here on September 12th is the key level to break. If you can get above that, notice how the 100, 200, and 300-day simple moving averages have all converged between 147 and 150. Crucial resistance zone. If it can close above 150, that's going to be major bullish implications. If that level turns into support, you could possibly see a run all the way back up to 3. You could see a serious jar fill. So you've got this big resistance right here, and if it breaks, I mean, of course, there's going to be resistance, horizontal high close resistance on the way up, but there won't be any more moving averages to break. The DELT will be above above all the moving averages, and that would be a clear signal that the chart is strong and that there's more upside potential. And so if you look here, you know, it could retrace and make that move all the way back up to the previous high from back here in May. Now that's way looking out. You know, first things first, it's got to bust through this September 12th resistance, and then it's got to get above this cluster of moving averages. But if you see the share price above 150 and holding the 150 level, that's going to signal more upside potential. Another reason why we like this play is you've got the volume spike. So if you look over here at the volume, notice how it's the largest volume day since, well, back here in the last big run, you know, since back here in May that we were just talking about, levels that it might run to, or it could possibly retrace to if support holds and it breaks resistance. That's a lot of speculation. And so if you look here at MACD, there is bullish crossovers on both time frames. Notice the MACD line crossed over the signal line on both time frames. All signals that the chart is heating up. So everything's pointing towards this chart really heating up. It just needs to break resistance. Okay, take a look at HMNY. Okay, I had to use a bigger chart for this one. I wanted to show you this chart. It's up 14% today. You know, this is a play we've been following for a while. You've got RSI at 86, Fasto at 94. It's been at these levels and heading higher. And so the big thing is it's filled the jar. So if you look over here to June, there's this June previous high close. There was a giant run, and then the close up there in June. And then now, if you can see, it actually closed above that level. And so this 1350 zone, we're calling it, is the key level to turn into support. So yeah, I'll have to change the jar here. It got filled all the way up to the yeah, let's see if I can. No, I guess I don't have it on the annotation setting. But the bottom line is the jar. Like last time that we were tracking this, you know, to be honest with you, I put out alerts when this run was first starting way back here. Okay, and then I clearly remember putting out some charts when it paused here at 6, saying that there was more upside potential if it could break through resistance, and then we were looking at 10 as the next resistance level to break, and it just kept running higher. This thing just keeps pushing higher, and notice the entire time it's holding EMA4 support. That's that pink line there, currently at 1306. If you're a swing trader and you're not looking to flip like crazy, there's no freaking reason to sell HMNY until there's a close below EMA4. I mean, unless you're locking in gains, which is never a bad idea. Nobody ever goes broke taking profits. You know, there's no shame in locking in gains, okay? So that's not a problem. But if you're a swing trader, I mean, people overtrade, and this is the perfect example. You could have just kept riding this on. We gave out an initial alert down here in the 3s. Okay, and then now it's up here at 15. You know, it's like a 400+% gainer in a very short period of time on a stock that's trading at $14. So it's a quality stock. So I'm just saying that if you have a stock that's running and it's riding the EMA4 support higher, you're over trading if you're not letting it ride. If you're a swing trader, you can just let it ride. Once you see this EMA4 break, you know, unless you're locking in gains. If you're locking in high day gains, that's cool. You know, I know a lot of people they get into these stocks and then they sell them right away, and the chart's still really strong, and then they jump into other plays and lose money when the entire time they could have just been riding the winner the entire time. It's not as sexy to be holding for an extended period of time, but to me these percentage gains are super sexy. You know, to look at your account every day and see that it's going up is pretty darn cool. Okay, so bottom line, it's all the way up here. It's completed the cycle. The jar is filled back to this June resistance level, and so it's got to now stay above this 13, 15, 14 zone. If it stalls out here, this could finally be the level. There's some unfilled gaps below. We'll get into that. It looks like there's a gap right here. You know, you could see a drop down to 11 if it stalls out. The EMA4 at 1306 is the big level. A close below that level is going to be your signal the chart has finally cooled down. Okay, so yeah, and one more to take a look at here is IMUC, and this is a stock that is setting up. Notice that it's been turning this 50-day simple moving average, this green line at 32 and the middle Bollinger Band at 34 into support. It's formed this super tight channel for like 4 weeks, and then today, look at this volume spike. Boom, giant volume spike, over 12 million shares traded. So the chart is super heating up. It closed right at the top of the channel. The top of the channel is this closing price from back here in July, and so it needs to break above the July closing price to head higher. Notice there's a gap. There's this we're calling this gap number 2 here is this is the first gap in July, and there was a big drop, and it created a big gap down here between $1.10 or so, $1.05 and 70, and then there was a candle, and then another little small gap, and so this gap looks like it could fill on a break above the top of this channel, and so if it fills that gap, you could see a run up here to the 100-day simple moving average at 66 and the bottom of the gap level from the previous gap. That is our target. That's what we're aiming for. With this volume, that's our clue that it's going to want to push higher. Now, if it drops below 34 and 32 support, below the middle Bollinger Band and the 50-day simple moving average, then it will no longer be in play. It needs to stay above those levels to remain in play. Keep an eye on IMUC. It looks like it's really heating up. Okay, thank you for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.